Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today on Magna Mining. Magna Mining is traded on the TSX.V under the ticker NICU and on the OTCQB under the ticker MGMNF. And I'm joined today with the CEO and Director of Magna Mining, Jason Jessup. And Jason, it's always great to catch up with you here at the KE Report. We have talked at some various conferences and actually just ran into each other for a little while at the Vancouver Resource Investor Conference just last month. But nice to get you back on the show for an update. And I want to start off by giving you a quick kudos. I noticed that the news came out you were one of the 50 top performing companies on the TSX Venture Exchange in 2025. So, way to go on Magna Mining and getting some notoriety at the volume level, share price level, and performance level.
Yeah, well, thanks a lot, Shad. It's great to be back chatting with you again. And yeah, we were pretty honored to be included in that TSX V50. It was, it's humbling a little bit. I started this company back in 2016. We were a private company, quite small, and we've grown a lot. So it's a real example of the team that we have, and really speaks to the work we've been doing. So yeah, it was great to be included in that list of 50 great companies.
Well, let's dig in a little bit more to the company. And I know that people listening in may be familiar with you in the past, more nickel and PGM focus, but you've got a major transaction that you are going to be closing at the end of this month with KGHM. And this is on a complex of different mines and development projects and even some exploration projects. Most notably, you're going to be a producing copper company, so still having exposure to nickel and PGMs, but more copper forward now. Can you give us an update on this big transaction that's getting ready to close here just in a couple of days?
Yeah, Shad, this has been it's been a lot of work, and it's been a lot of time in the making, and I would say is one of the reasons why I founded the company. The assets we're acquiring from KGHM were formerly within FNX Mining, and FNX became Quadra FNX, and it was acquired by KGHM, and now myself and our team who have worked with FNX and know these assets well are actually acquiring them back. So it's been a long time in the works, but now we're at the point we'll be closing this on February 28th. And on March 1st, as you said, we will be in control of these assets, including the producing McCready West copper mine. And as of March 1st, we'll be shipping ore to Vale's Clarabelle Mill and accruing revenues. So it's a major transformational acquisition for us, and we're right at the finish line.
Well, I think a lot of focus initially, Jason, is going to be on McCready West because it's going to be the pay dirt. It's going to be the income generator for the company here. But you've got a whole series of other mines in here. And we've talked a little bit about this before, but maybe just remind people that in addition to McCready West, there's Levack, there's Podolsky, other mines that the team is familiar with from the days in FNX.
Yeah, so the McCready West, Levack, and Podolsky mines were the producing mines that FNX owned and had brought back into production. Most of these properties we're acquiring were former Inco mines here in Sudbury. So it is great to have a portfolio and a pipeline. And when it combine that with our permitted Crane Hill project, as well as our permitted Shakespeare project, upon closing this acquisition, we'll have five permitted projects in Sudbury and one of them in production. So it is a great production profile. And with that, a portfolio of really interesting exploration properties as well, and some of them with past production history. So it sets us up for, I think, an unprecedented growth profile that will really be anchored by a producing asset that's been producing for over 20 years with FNX and produced previously for about 25 years by Inco.
Well, and let's dig in a little bit to how you imagine this playing out as far as the different sequence of mines. I know you're still working this out, and there's probably a lot more you'll be able to say in a couple of weeks once you really dig in there and get on the ground. But do you see it a situation where McCready West is up first to bat, but then Levack comes in second? When would some of the work that you've been doing at Crane Hill come into the equation? Would Podolsky hit alongside of that? Could you give us a quick sequence of how you think things may play out?
Yeah, and again, I'll be able to give much more, I guess, direction and a better forecast post closing. But what I can say right now is our focus will be on McCready West in 2025, making sure that mine's running at an optimal level. Our team has been working very closely with the management team out at KGHM for the last few months, reviewing the mine plan there, looking where we can optimize it, looking where a little bit of additional sustaining capital may go a long way, and looking to invest some more into that mine to kind of grow the production over the next 9, 10 months to get to that what we consider an optimal steady state. Which would be somewhere probably in the range of 25 to 40% higher production than what it currently is. So with that, we'll also be looking at a restart plan for the Levack mine. And Levack is next door to McCready West. It has been on care and maintenance since 2019, but has a very long history of production. It operated between FNX and Inco for over 100 years, producing somewhere in the range of over 60 million tons of ore from underground. So a fantastic mine, still has a lot of resources there. So we'll be building that restart plan. And the mine is the secondary egress for McCready West, as well as one of the other neighboring mines from one of the other mining companies here in Sudbury. So the mine's in great shape. The shaft is being used almost on a daily basis. And there's people going underground, making sure things are in good shape. So we don't anticipate that restart to be, very capital intensive. And we think by at least the fourth quarter of 2025, we'll have a good restart plan for a potential 2026 restart.
And then if you had to pick between Crane Hill or Podolsky, which one do you think would be third in the batting order? I'm kind of putting you on the spot, but just curious.
Yeah, it's like trying to pick which one of your kids is the favorite, right? But if you look at it from a scale and it's sort of the impact on our company, Crean Hill is definitely the next one. Now, we've done a PEA on it, so we have, I think, a fairly good understanding of what the capital and the timeline will take to put that back into production. This is pretty forward looking, but what I can say is there's potential for, cash flows from McCready West to fund at least a good portion of the restart of Levack mine. And then if Levack and McCready are both revenue generating, potentially to fund the construction of Crane Hill. And, we're looking out potentially, 24 to 36 months out. But we think that is a definite possibility, and that's probably what we'd want to do. If we have McCready West, Levack, and Crane Hill all in production, in say 36 to 40 months from now, we're going to be a much bigger and much better company, and that's what we're aiming to do.
Yeah, it's a pretty exciting potential growth profile for the company and a platform of different mines that you can kind of kick on at different points in time to keep feeding a larger and larger production profile. I guess this also speaks to the benefit of being in Sudbury, Jason, and just the partners that you have with both Vale and Glencore. Let's remind people that you also did a bulk sample from Crane Hill. You should be getting paid on that, I'm assuming. So how does that work as far as the bulk sample? What's the timeline on some of that converting back to revenue for the company?
Yeah, that's the great thing about Sudbury. And one of the things that allows us to do what we're doing in such a capital efficient manner is that the infrastructure is already in place. We don't have to build it. And we can utilize the existing mills here that are owned by Vale and Glencore to process the ores. And, conceivably all the ore will be producing for foreseeable future through those mills. So it's a great opportunity. Back in September of 2024, we did process a 20,000 ton bulk sample from our Crean Hill mine at our 109 footwall deposit through Glencore Strathcona Mill. And yeah, we'll be getting paid on that probably in about 5 weeks or so. So, that's great, right? That's revenue coming in at a time when, we can use that and reinvest it into our other projects. So it is great, and we'll be accruing revenue in March from the McCready West mine. And, this is it's a very exciting time for our company.
Well, and Jason, with all this work on the go, people may wonder how you're going to pay for it. So that's just one element. You're going to have the ability to start getting paid at McCready West starting next month. You're going to have some of that bulk sample from Crane Hill that you get paid on, but you've also announced an upsize to the convertible debenture along with the private placement. Initially, you were looking for 25 here because you had 15 in the convertible debenture and then another 10 in equity for private placement, but you've upped the size from 15 to 22 million on the convertible debenture. What does that do for the financial health of the company moving forward?
Well, yeah, this financing puts us in a very strong position. And we set out to do this financing actually to replace a term loan that we had been working on and considering. But this convertible debenture is actually a more elegant solution for us at this time. So when we went and launched the deal, we had a tremendous amount of interest in it and from very, very good shareholders, both existing shareholders and a couple new very good shareholders. So we upsized the convertible debenture to 22 million and then filled the book on the equity. So yeah, we'll be closing this 32 million, which will leave us in a very strong position to move forward with more than ample working capital available and the ability to invest some capital. And we're probably, again, ballpark investing approximately 5 million Canadian of sustaining capital into McCready West over the next 6 to 8 months to help put some more development in place and increase production over the course of 2025. So we'll be in a very good, healthy treasury position.
Well, and will there be any budget for exploration? Because I think all of these projects have that exploration upside still there. How much will be going towards that side of it, the drill bit?
Yeah, Shad, it would be an absolute shame if we didn't have a healthy exploration budget. Some of these properties that we're acquiring, I think, are just some of the best exploration targets I've ever known. I think absolutely fantastic. So we do have currently about $5 million budgeted for exploration. Now, at this time, we're focusing our exploration on our brownfield sites, primarily McCready and Levac, with some additional exploration later in the year out at Crean Hill. But we'll have two drills turning, within days of closing in March at the Levac site, as well as drills turning underground at McCready West. So, our followers can definitely be expecting some drill results from those properties in the weeks after closing.
All right, it sounds like, Jason, you're going to have a really busy next couple months here. Even the next couple weeks, there's going to be a lot of news flow on tap from the exploration side, from the transactions closing, and then some of these payments starting and the mining starting operations at McCready West. So a lot of news flow to keep tabs on. I also just want to get your general thoughts on the sector, being involved in copper, being involved in nickel, being involved in the PGMs, platinum and palladium. What's the environment like for that? I mean, you're actually at the show, the BMO Capital Markets, their 35th anniversary Metals, Mining, and Critical Minerals Conference. What is the vibe like there for base metals? What's the reception like for the work your team is doing? Can you give us a little color around that?
Yeah, this has been a really great conference. And Shad, this is one of my favorite conferences. I think it's one of the most productive. It has a huge number of investors here, one-on-one style meetings, kind of that speed dating, 25 minutes per investor. We've had back-to-back meetings for the last 2.5 days. So it's been really, really positive. It's sometimes a little bit almost flattering, I guess, when we're walking around, Paul Fowler and I are walking around the conference and people we do not know recognize us and know our story and are coming up to us asking questions about Magna. So it's been very positive. I think that the sentiment around copper is very good. Obviously, people still are very bullish and excited about gold. And nickel's always have been a tough one for the last, I'd say, 12 to 18 months. And the great thing about it is that those who still see the contrarian investment in nickel look at us and say, this is great. You guys can turn nickel on from your nickel zones at your mines in Sudbury. But in the meantime, you can continue to make money and mine the copper zones. And that's exactly our plan. And people really seem to understand that. So it's been a very good show.
Well, Jason, just as we wrap up, we've talked about a lot in this call. There's even a lot of projects we haven't even talked about yet that are part of the package from KGHM, and we haven't even really got into Shakespeare in this call. So there's so many moving parts with Magna. And again, a lot of times you were branded as the nickel company with PGM kickers. Now that there's such a copper focus with all those other metals still being there, how do you want people to think of Magna Mining? How do you want to be branded in the marketplace?
We really want to be branded as the best, smartest mining company out there. And, we don't put a metal in our name because really we're here to make money. And, we're in a mining camp that we believe is one of the best mining camps in Canada. It happens to have copper, nickel, platinum, palladium, gold, silver, and cobalt. And we're going to mine the deposits as they make sense and as we can maximize our profits and revenues. So that's what we're doing. For us, we just want people to recognize we're making good, smart business decisions. We're a real mining company and we have a real business.
All right, I think we'll wrap it up there, but a lot of news flow on tap in the future here from Magna Mining, and we'll be following along with it here at the KE Report. For those listening in, if you want to follow along, definitely click on the link below this interview. It takes you right over to the Magna Mining website, straight to their news section where you can sign up for updates or just follow along with the news as it hits the wires. Jason, keep us posted. I'm sure we're going to have exploration results and plans that are developing on all these different mines, and we'll get you back on for an update soon. And looking forward, as always, to our next conversation.
Well, thank you very much, Shad. And yeah, I look forward to talking to you the next few weeks.